Well, happy Monday, everybody. Let's just say it's a mixed open right now. Let's take a look at the sector leadership here. Of course, this is the biggest week for earnings, and that's what's going to matter right now. Semi's weak here because we've got problems. Micron's been weak. Lam Research's been weak. A number of stocks are down 2 or 3%. Energy a tad on the weak side. Materials, industrials also not having much energy at all. But remember something, we're right at 2,800. We're at the top end of our range here and less than 2% from the historic highs. Earnings have been generally very good. 17% of the S&P is reporting now. 87% are beating expectations. So the numbers are going up. So today we're talking about 22% earnings growth for the second quarter. On July 1st, we were talking about 20.6%. Revenues are also up a little bit. The important thing is Q3, which is what we care about. The numbers are holding well. This is exactly what happened in the first quarter. We had better numbers than expected going in. They were high, and the second quarter numbers held up very well. So overall, let's take a look at where we are in terms of our trends right now. Earnings are solid. The momentum has been favorable overall. We're just shy of new highs on the S&P. 2,800 is still on the upside. Sentiment, I'd say it's neutral. Believe it or not, there's not a lot of euphoria out there. That's good news. But there's also very little selling pressure in the market. Also good news. Valuations, I'm calling it reasonable. People may differ with me, but when I look at 2019 numbers, S&P is 16.5, 16.8 times forward numbers. That's not high priced by historic standards. Now, there are bearish trends that exist out there. We have no clarity on trade, and that's certainly an issue. The dollar is strong, although not dramatically strong. It's starting to show up in a few, but not a lot of earnings commentary. And as I mentioned here, we're talking about leadership overall fairly narrow. And I have a little bit of a difference of opinion on that. Now, you heard Jimmy talking about Illinois Toolworks. A lot of debate about this. They did miss on revenues. They lowered guidance. They cited specifically Forex, 12 cents hit for the year on foreign exchange, and also higher costs. So we're now getting into this whole argument about margin pressure here. Obviously, the margins are getting pressure on higher commodity costs and issues like that. And this gets into this terrible anxiety about peak margin, not just for industrials, but in general, there's been peak margin anxiety for 2 years in the S&P 500. We've peaked at the S&P is about 10% margin overall on average for the S&P 500. There have been people arguing that that's going to be a problem. It may be. We're certainly not getting better numbers on margin, but it's been holding up right around that 10% level. So far, I would say there is anxiety about this, but it's not manifesting itself in any great way. The numbers are not dramatically coming down. About that narrow leadership, well, here's the source of it. It's basically been argued that the FANG stocks are the big leadership group. This month, to a certain extent, they are. But remember, the S&P is only up 3%. Apple's up 3%. Netflix is down and really dragging the overall FANG stocks down. I guess the problem I have is this idea that, well, the implication is not really worth owning anything else but FANG. And that's just wrong. That's the wrong way to look at the market when you've got other groups like biotech, aerospace and defense stocks, and pharmaceuticals. Even with a downside today, semiconductors are up. And the transports have been very strong because airlines and railroads, by and large, have had very good numbers and very good earnings. So I guess keep in mind, there is plenty to buy in the stock market besides the FANG stocks. We're down 21 points. Carl, back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.